Yes, good afternoon. We'll just move to the next slide, please. So I'll cover an overview, some financial highlights from a recent half-yearly and outlook for the business. Just a bit of on the next slide, we'll cover the companies or the group structure within the business. So really, we are a modern telco and IT services firm in that we're leveraging the power of the cloud to deliver cloud-based communications and manage IT services to business. We have three key business units: a domestic telco that targets the mid-size companies, known as Next Telecom. We have an ICT business called On Platinum, which is a leading managed IT services business into the mid-market. And then we have our global business, which sells the latest generation unified communication services, as well as providing what we call CPaaS, which is Communications Platform as a Service to large wholesale providers. Our catch cry is that we enhance business agility through innovative cloud-based communications and IT solutions. And we have extensive coverage in Australia and now Singapore, Philippines, and the UK. We'll just move forward. Next slide. In terms of our product set, I don't want to go into the detail here, but more so to show you our domestic business is mainly focused on the latest generation voice and data services. Our domestic IT business On Platinum focuses on managed IT services, and we're getting a greater level of interaction between those two business units. And then our specialised wholesale voice services, the latest generation, in particular unified comms with Microsoft Teams calling, is sold by our global business, focusing mainly on Asia Pacific, but also into other parts of the world. Move forward, next slide. We've been operating for circa 10 years globally, and we've established a global network for our voice services, and particularly for unified communications. We have our super POPs located in 6 key locations. They run in AWS nodes, and we have significant capacity there. We have 2 nodes in the US, East and West Coast. We're in Germany, and we're also in London. We're in Frankfurt, Germany, and then across down to Singapore and Australia. And as we move into various countries in the Asia Pacific region, we need to put some infrastructure in there as well. We've recently modernised this infrastructure with the latest generation of technology, and we can carry a significant number of voice calls in for mainly the corporate and the wholesale market around the world. And we are a leading provider of Microsoft Teams calling. This is whereby we connect telephone numbers and connect Microsoft Teams users into the telephone infrastructure around the world, and we're a key provider in the Asia Pac region. Just move to the next slide. Our global business is the one I just want to focus on a little bit more here. I think you can understand our domestic telco business, our domestic ICT business. The one where we see the significant growth going forward is in our global business. We would be the leading provider and one of the few in this part of the world that's providing unified comms services, the latest generation. This is where you can be anywhere in the world and you have access to the full range of unified communication services. We also provide wholesale CPaaS services in various countries for large wholesale customers, and they could be large call center providers. They could be content providers. They can be over-the-top type providers. Why is it that we can do this? We have extensive experience and technical know-how. We've been doing this for circa 10 years. Have an extensive engineering and technical team. We've always focused on the global marketplace. Since we went to launch these services, and we were one of the first in the world to launch Microsoft Teams calling on a global basis back in August 2018. Some of the key things we're doing currently is we're upgrading our advanced service ordering and management platform. We call that One Portal. We're making that available for a number of our key customers. And within the last 12 months or so, we've announced some alliances and partnerships with some key customers. The most significant of those would be with Vodafone, and we're providing Vodafone's global business, headquartered out of the UK, but we're providing their business globally with core wholesale unified communication services that they can then take to their customers. We also announced some more recent relationships with the likes of KDDI out of Japan, one of the world's top 10 telcos, where we're providing them also with key unified communication services. We expect to see significant growth in our global business over the next 2 to 3 years, and one of the key strategies is to target the Asia Pacific region, and in particular to go out and go deeper into that market and get licenses in key countries across Asia Pacific. And we're making significant progress on that currently. Move to the next slide. In terms of our recent financial highlights for the half year, our half year revenue compared to the previous year was up 50%. Our underlying EBITDA was up 16%. Slightly under the figure we would have liked, but we are investing heavily in our global business with additional sales and operations resource to support some of those key customers. Our gross profit was up 54% to 12.2 million, and we continue to hold a very good gross margin of just under 50%, which we're really happy with. A bit more detail on the next slide. There's the revenue shown there, and the growth of revenue over time. This is half on half. You can see there we've grown from about 9 million up to 26 million, and also we've continued to grow our underlying EBITDA. We move to the next page. We've got some divisional breakdowns. You can see there our revenue for the first half, 26 million. So we are expecting to be over 50 million for the full year. Our gross profit at 12.2 million. So on an annualized basis, over 20 million now expected for the full year. Breakdown by our key business units. Our SME business around about 12.2 million for the half. It has been flat, but at the same time, we're happy with that progress to have held our own in the marketplace. You can see the growth there through the global business going from 4.9 to 5.6 million. And then as we brought that ICT business on, we got a full 6 months of trading there. That's about 8 million. So if we look at those businesses holistically, we've got about a 25 million turnover in our SME business, around about 11 or 12 million turnover in our global business, and about a 16 or 17 million dollar turnover in our ICT business. EBITDA by business unit is shown there as well, to give a total of 2.3 with around about 1 million in corporate overhead for the first half. Move to the next slide, please. Cash flow, good underlying operating cash flow of 1.1 million, some payments for business acquisition, etc., and also some proceeds from borrowing in the period. But really happy to, to be able to say that our expectation now is that the business is fully funded from the current growth profile with no additional capital needed, and we expect to be cash flow positive as we move forward. We move to the balance sheet on the next page. You can see there that we increase our net assets to 32.3 million, cash at bank of circa 2 million as of the end of December, and circa 9 million dollars in debt. We're paying that down in terms of the principal at 1 million per annum. We'll move to the next slide. In terms of outlook, in terms of our strategic imperatives, we want to continue to expand in the corporate mid-market with a full ICT service offering, and where we can see opportunities, we'll look to expand domestically to become a national provider. A key goal of ours is shown in that second column there, to become a key unified communications and wholesale communications provider throughout the APAC region. We have a number of key partner relationships where they're seeing good growth from their customers, so we'd expect to see that grow over time. And then we'd like to see our business grow to circa 100 million revenue over the next few years as well. In terms of the outlook for the full year on the next page, we'd expect revenue to be over 50 million. We're seeing good growth in terms of new sales. We're not seeing a softening there. And we'd expect over the next 12 months to get, good increases in our revenue from Vodafone and some other key partners, particularly in our global business. Looking at 5 million plus underlying EBITDA, that is a little bit less than what we were originally were hoping for, but we are seeing some additional costs in terms of investment into our global business, which is impacting the bottom line. And nonetheless, we'll continue to look at opportunities for strategic growth as well as the opportunities arise. That's all I wanted to cover in terms of the presentation. There is a glossary at the back of this pack for those interested who don't maybe understand some of the terms. And I think that provides a good summary of some of the technical terms outlined in the pack.
Thank you, Peter. Got quite a few questions here. Just trying to, how does a kind of new investor reconcile the high gross margins of 47%, the gross profit of kind of 12, but the EBITDA's 2? Can you talk us through the mechanics behind that?
Yeah, well, I mean, obviously, what's there is the OpEx, which is predominantly staff-based. And as we look to expand into the Asia Pac and globally, we are required, we're needing to put more resources into that. So that's really a growth play for us. We won this large contract with Vodafone, so we're their global provider, Vodafone Group PLC out of the UK. They're a significant provider in the enterprise market, and so we've had to add resources to that. So in a way, we're investing now for the growth that comes down the track, and to deliver the growth in EBITDA.
And what role will those recent acquisitions play moving forward?
I think those recent acquisitions, what we're seeing is good revenue and good gross margin and EBITDA from those businesses. We expect to see with both our domestic SME and our domestic ICT business some very good synergies coming out of those in terms of revenue growth opportunities. So I think we should be able to see some good growth come from those really on the revenue side. And then the global side, we haven't made any acquisitions there. That's really an organic opportunity at this stage.
Yeah, there's a question here around the global division. Does it have any kind of meaningful fixed cost leverage as it grows, or does it require kind of more incremental capital?
No, look, I think we put most of the capex and investment into that business now. We upgraded our core network globally, over the last 12 months to satisfy a number of key customers. There is a requirement still to expand that capacity over time, but it does have significant operating leverage now to carry a lot of traffic. So as we move more so into Asia, we're doing that typically customer-led. We have a number of key wholesale customers who are wanting services from us. As we expand into Asia, an example would be, say, the Philippines. We do more services in the Philippines, with good gross margin. A lot of that should flow to the bottom line.
And acquisitions on the timeline moving forward, in particularly globally?
Look, I think at the right time, acquisitions would make sense. The current market is not particularly conducive to acquisitions. It's a tough market out there in the tech sector, with the US tech sector coming off. But I think initially we've got some huge organic opportunities globally. We want to focus on those, and then at the right time we can look at acquisitions, particularly mainly out of the Asia Pacific region.
And you did touch on saying 2023 is a big year for you with growth in the global division from Vodafone. How do you intend on this happening?
Okay, so the contract we have with Vodafone it's really to bring a number of their key customers and users onto our platform over time. So we're working closely with them. We have resources in Asia, in Singapore. We have resources in the UK working with them. We are currently upgrading some of the services and the systems with Vodafone, as alluded to in this and other presentations. And that is almost completed. We're then at a point where we're going to be selling and helping them sell their services to large multinational corporates. So off the back of that, we will get those users then come onto our network. That'll be Vodafone customers, but we'll then start to see the revenue growth off the back of that.